Good afternoon, ladies and gentlemen. Welcome to the FSDC Industry Exchange Series. My name is Rocky Tong, and I'm the Director and Head of Policy Research for the Financial Services Development Council. Today, we are launching a report titled Road to Carbon Neutrality, Hong Kong's Role in Capturing the Rise of Carbon Market Opportunities. This is a continuum of efforts of the FSDC on ESG and sustainability, a topic that we have attached much importance to and put in quite a few reports since the launch of the FSDC back in 2013. This is in part because our governments, not only that of Hong Kong, but also that of the central government, have set out very clear carbon peak and neutrality goals. By now, I trust and surely hope that you are aware of what carbon peak and carbon neutrality means. Well, in China, for the country, the carbon peak goal is to reach carbon peak by 2030 and to reach carbon neutrality by 2060. In Hong Kong, we have already reached carbon peak back in 2014, and we are expecting to reach carbon neutrality by 2050. So what all these targets mean to us is that we definitely need some tools for the economy, for the companies, and for every one of us to achieve that goal together. And we believe that the carbon trading market is going to give a very specific price tag of the emission, and thereby going to lead to an earlier and hopefully more efficient way to reach such goals. This is exactly why we have put together a working group and come up with this paper, which is already published on our website. And this working group is prepared by, is led by two seasoned professionals who are both members of the FSDC. They are Mr. Paddy Wu, Partner and Head of Environment, Social and Governance, Hong Kong, KPMG. The other co-leader of this working group is Dr. Terence Chan, Chairman, Bay Area Capital Partners Limited. And today, we are also joined by two very seasoned professionals in the field, namely Ms. Miranda Kwan, Director of Knowledge Solutions, SGS Hong Kong, and Dr. Ivan Lee, Executive Director, Institute for Carbon Neutrality, China Galaxy International Financial Holdings Limited. Today's rundown is as follows. We are going to start this webinar with an introduction and presentation of the paper by Pat. This is going to take us through the first 15 minutes or so of this webinar, after which we are going to have a panel discussion featuring all the panelists that I mentioned earlier. And with that, we will be opening that forum to the audience, and you are, invited to share your thoughts and questions in the Q&A box. And I shall try to address all of them as much as practicable. Without further ado, Pat, I'll pass the floor to you, and please do walk us through the paper. Thanks.
Well, thank you, Rocky. Thank you to the FSDC for setting up this working group, and to Terence for co-chairing it, and to Ivan and Miranda and other working group members who worked on the paper together with the FSDC. So the paper is predominantly a paper that shows the lay of the land of the carbon market, which is at this current stage in the game, still very nascent. And there are two types of carbon market, which is the voluntary carbon market, VCM, and the compulsory or the compliance carbon market. And we have predominantly focused on the voluntary carbon market, as we feel that Hong Kong's role will predominantly be looking into the voluntary carbon market, with the mainland and other jurisdictions around the world really looking at the compliance or the compliance carbon market, which is predominantly driven by governments and the like. So the voluntary carbon market has really been growing quite significantly, according to BCG in their report, and with a CAGR of about 30% between 2015 and 2021. Now, although the global carbon market as a whole is around 852 billion, a small portion of that is the voluntary carbon market. And at this point in time, there remains a lot of room for development. And the paper really outlines where it is right now, what it really is, and what are some of the key hurdles and key considerations that are needed going forward for it to develop properly. So although between 2007 and 2021, you've seen a significant growth in the market from 6 million tons of carbon to over 300 million tons of carbon in 2021 of the issuances. This is still very small as compared to what really is the overall carbon market and in the world, and also the targets that we need to meet in reduction to meet those carbon peak and carbon net zero goals, carbon neutrality goals going forward. So on the next slide, please. So I think that one of the issues with the current voluntary carbon market is that it is very fragmented, and there are numerous different standards. And in the international market and the mainland China market, there are different standards currently that have not really been kind of like aligned as of yet. So I think that in the international market, there are these 4 main standards, of which 2 of them account for around, oops, can we go back to that slide? Yeah, and if we can go to, yeah, thank you. Yeah, and with 2 of them really accounting for almost 90% of the total market, which is the verified carbon standard, VCS, and the gold standard. So VCS and the gold standard really is the main kind of registries in play that is driving the market at the moment. And in China, what we have is really these CCERs, the China Certified Emission Reductions. Now, these are predominantly being traded in China internally. And I think that one of the roles that Hong Kong will be playing will be seeing how we can connect the China and the international markets, and how do we align all of these standards going forward for international and domestic participants to really be able to buy and sell these mainland China and also international market carbon credits. So if we go to the next page, so I think that with so much interest in the carbon market, there has been a number of different exchanges that have come about in the last few years. And we can see that in the mainland, there are already 2, the China Beijing Green Exchange and the Shanghai Environmental and Energy Exchange. They really predominantly serve the mainland local market. On the international front, I think that it is of interest to participants of this webinar that there are 2 that has real impact on our business locally, which is the Climate Impact X, which was set up in 2021 in Singapore, and also in late 2022, around October, November, the Hong Kong Stock Exchange also launched Core Climate, which is in the voluntary carbon market or voluntary carbon exchange in Hong Kong. So with those new developments, we expect that there are going to be a lot more activity in this area. And as the market continues to kind of like develop, we should be seeing a lot more kind of standardization going forward of this space. So next page, please. So there are a lot of challenges at the moment for the voluntary carbon market. And really on the left side, the primary market, really the problem has been this registration. So it does, so basically somebody sets up a project and a carbon reduction project, and then they will have to register it with these globally recognized registration platforms, which are usually NGOs. And then through that, they will be verified by the VCS or gold standard and the like. And so the long registration approval process of these projects is quite a long time, and there is quite a lot of queue. And as you can imagine, with the increased interest in this area, there is going to be a lot more projects coming up. So how are we going to reduce this length of time for these for the registration of these projects? And then also the high registration costs of the projects is also another factor that is a challenge for the VCM market. And then now on the secondary market front, on the trading side, what we have is that there is, a lot of confusion still with a lot of these different standards. And then there is there is a lack of transparency, whereby, basically the what the project is saying that they are going to be able to reduce, and the actual, there usually is a bit of a discrepancy. And although they have been initially verified by third parties, there is still a lot of skepticism around a lot of these projects and what they deem are their carbon reduction capabilities. And then the second one is this double counting of carbon credits, whereby because it is still not very technologically enabled, there could be a possibility that some of these carbon markets, these carbon credits are bought and sold more than once, or that they're overselling these carbon credits. And so in the end, is this really impacting the reduction of the carbon footprint globally is also in question. And then the final thing is the lack of liquidity and supply of high quality carbon credits. And so I think in the secondary market, a lot of the time what happens is that the project is developed and then it's sold to somebody, usually on an OTC way, and then the buyer just basically uses that carbon credit to neutralize themselves and is retired. So there isn't a secondary market for these carbon credits. And so with that, what the exchange want to do is to bring about a lot more liquidity and the development of a secondary market, whereby it's not just the retirement of the credits, but there is a buy and sell secondary market for these credits. Now, if we go to the next page, is the key considerations going forward. And as I mentioned before, the carbon credit standard is going to be one of the key considerations if Hong Kong is really going to capture this market. And I think that we do have an opportunity to play that bridging role that we have always been playing between the mainland Chinese market and the international market. So how do we kind of standardize the VCS, gold standard, and the CCERs, and have them kind of like be traded across the mainland and the international markets. And that will be dependent on how we deal with the standards going forward. The second thing is really the technologically enabled platform. And there has been a lot of talk around blockchain. And we feel that because of the lack of transparency and the chance of double counting, using technology such as blockchain will be able to allow for the carbon credits to be verified, and also for real-time online kind of like tracking of what are these projects doing, and to avoid double counting and to over claiming of the impact of the projects. And now on the upstream project development and product offering, I think that, as I mentioned before, to register one of these projects is an arduous process, and you have to go to Europe and other places. And what about kind of like having registries and things like that in Asia, and in particular in Hong Kong, whereby we can register projects here and reduce the queue, and continue to kind of like speed up the process of getting a lot of these projects on the way. And then the final 2 points of really kind of like the development of the ancillary services and capacity building. I think the financial services sector really has a critical role to play as really the risk management aspect and the facilitator of this market. And in developing this ecosystem, we'll really need all players to be setting up their offices and the services in Hong Kong, and to allow this market to really flourish. So with that, I think that that is the overall overview of the paper. And I'll probably pass it back to Rocky now, when we'll be going into a Q&A session. So thank you.
Thanks a lot, Pat. Fantastic. But your session is not ending anytime soon. I wish to come back to you for the first question of the panel. Start with you. So you did mention quite a bit about how the voluntary carbon market is going to be blooming, and it will play a very important role in the road to carbon net zero. So perhaps you can also reiterate how significant it is, in the journey. And with that, I would like to stick to the last part of your presentation. You highlight how the financial services industry can play a role, for instance, in risk management and being the facilitator of development. Perhaps you can walk us through a little bit deeper, a little bit further in that journey, and how it's going to look like for the Hong Kong financial services industry.
Yeah, so thank you, Rocky. And I think that, I mean, as you can imagine, with kind of like setting up of these exchanges globally, the financial services sector is going to be a critical player in the facilitation of this market, the buying of selling of this new asset class. And really kind of like bringing about a lot more transparency, verification, and then also assurance into the market in terms of, well, are they buying things that are, legit and the like. And so I think that being the facilitator of the carbon market is going to be a critical role for the financial services sector to be playing. And I think that what we've been seeing globally is so many companies coming up with net zero goals, net zero targets. So a lot of companies may be saying, well, we're going to be net zero by 2050. Yes, which is still 20-something years away. But I think the market is really already crying out for intermediate targets, and for companies to be doing things in the meantime, in between now and 2050, to really kind of have these intermediate targets and intermediate goals. And so how can the financial services sector really play a consulting role and an advisory role to the companies on really helping them to achieve these targets that they have said publicly that they're going to achieve. And the carbon market is going to be one of the tools to be doing this. And just from that perspective, I think that just consulting, advising the market as to how are you going to use this as one of your toolboxes to be going net zero, I think is going to be also a critical role for the financial services sector to be playing.
Thank you. Thanks a lot, Pat. Now, I'm going to our second co-leader of the working group, Terence. The global voluntary carbon market has grown in value and surpassed 2 billion back in 2020, just last year. As the VCM market grows, can you share some recent developments with the audience, perhaps highlighting what has happened following COP27?
Yeah, thank you, Rocky. The global voluntary carbon market has grown significantly in recent years. Recent market development from the COP27, we see the United Nations Climate Change Conference held in Egypt, particularly noteworthy. The conference saw a renewed commitment from countries and businesses around the world to reduce their carbon emissions and invest in clean energy. One major development is the increased participation of large corporations in voluntary carbon market. Companies such as Microsoft, Amazon, and Google have announced plans to go carbon neutral. They are purchasing carbon offset to help achieve the goals. This not only helps to reduce their own emissions, but also help to support the development of clean energy projects around the world. Another important development is the growth of the carbon offset projects in developing countries. Those projects not only reduce emissions and also provide important economic and social benefits to local communities. For example, project promotes sustainable agriculture, reforestation, and clean energy can help to create jobs and improve life. The voluntary carbon market is also become more transparent and accountable with the development of new standards and certifications. Instead of growing regulatory market interests in VCM, the International Organization of Securities Commissions also, and Association of Global Financial Regulators, including the US Securities Exchange Commission, SEC, and Commodity Futures Trading Commission, CFTC, issue consultation papers on both the voluntary carbon markets and compliance carbon markets. These various initiatives take shape, and the carbon market continues to scale. Buyers of voluntary market credits will have to navigate developing voluntary guidance, regulations, and stakeholders' expectations. Make it easier for business and individuals to identify high-quality offshore projects that have a real impact on reducing emissions. The conclusions, I think the global voluntary market is an important tool in fighting against climate change. The recent market development following the COP27 demonstrate growing commitment of countries and business to reduce emissions. As the market grows, I think it will become increasingly important to grow with integrity through a higher grading of credit quality. So we must continue to support growth of this market in order to achieve a more sustainable and livable future for the market.
Thank you. Thank you very much, Terence. I think both you and Pat have highlighted how the voluntary carbon market will be playing a very important role in the journey. And you also highlighted how regulations and guidance from the regulators perhaps will be playing a very important role in the journey altogether. Now, I'm going to turn to Ivan. Ivan, I remember in one of the working group meetings, you highlighted to us that you have started doing this for over a decade. You did that in early. I don't recall the exact timing, but it was over a decade ago that you started doing it. And then you also shared with us how it was not very high on different stakeholders' agenda. Now that we have seen all the changes, and that our country has pledged to reach carbon neutrality before 2060, perhaps you can highlight some of the achievements, developments related to China's VCM market. Of course, including what we are seeing here in Hong Kong as well.
Okay. Thank you, Rocky. Thanks for your moderation. And China, like what you said, and what also Pat highlight, it set a very ambitious target for the carbon peak and carbon neutrality. So carbon market, like a compulsory one and like the voluntary one, just one of the two to fighting to achieving this very ambitious goals. So compulsory market is the first one that launched since 2011. So like only the power industry are incorporated in this game, in this compulsory game. So for the VCM, actually, we can separate into two types. We can classify. The first one is the VCM attached to the compulsory market. So like in the compulsory market trading, in the national carbon trading market, it allows 5%, or maximum 5% of the allowance to be replaced or be used by the CCER. So CCER is one, and it's just paused since 2017. So a lot of the project are waiting, and everyone just looking forward for the reopening of this market for this CCER registration and issuance process. So this will be the first type of the VCM, and before it will start. Actually, a lot of places, a lot of provinces, a lot of cities, and a lot of big companies like Tencent and also Ali are trying some new type of VCM. It's like, for example, in Guangdong, we have something called Tanpuhui. We also have a chapter to introduce it in this paper. And like a Tencent and also Ali, they also one similar program that just like collect the micro level or maybe individual level of the emission reduction activities into some tradable credit, and coming to become more maturity business mode in nowadays comparing to what you said some years ago. So we can see this is a lot of different standards raising. We can see like a Tanpuhui and like what I said, maybe Tengxun is called Tengxun Xingqiu. Ali, you can see is in Ali the forestry one. So a lot of different program and in city are trying different things. So that will come to the role of Hong Kong. Like a Pat highlight, in my mind, the carbon actually is the natural of the carbon is a financial product. So it should have different prices in different places, just like currency market. So like a Pat highlight, Hong Kong is naturally feeling a bridge, being a platform, being like a hub. So why not utilize our financial advantage, the regional advantage to just like being like a hub for different kind of standard to become together and let the market decide which one should be paid as a higher prices, which one should be welcomed by the market. So I think Hong Kong should be this role, and Coral Climate is a very good start for last year. 400,000 turns for the first month we see is a good start, but still have a long way to go. And FSDC, we did a great job. We keep the not only the Hong Kong exchange that we discussed many times, and maybe other exchanges in Hong Kong in the future for some future guidance or suggestion. So that's what we discussed.
Fantastic. Thank you very much, Ivan. I think it makes a lot of sense. So Hong Kong as a marketplace, we want more players, we want more products, and we want more investors. So simply put it the way that, like what we are laying out in the paper is to make sure that the system is there and the platform is there. And then so long as we demonstrate our strengths, then people will be naturally attracted to our market. Now, I'm going to turn to Miranda. Miranda, SGS is, of course, one of the world's leading verification and certification organizations. And you guys have extensive experience in verifying greenhouse gas emissions. Now, what are some day-to-day observations and challenges that your clients have shared with regards to the voluntary carbon market? And do you see any other specific trends that would be of interest to the audience?
Yes, thank you, Rocky. Now more clients are aware the impact of climate change to their business, but there are still many uncertainty and unknown. Just you say, more company to have their new, more company want to develop their innovative ideas to reduce the carbon emissions. But our clients may not know which carbon standard, just had mentioned, ECS, gold standard, CCR, and other standards, which is more suitable for their projects. And also, it's not easy to understand whether the projects are eligible to be registered and verified. And some of their projects are not in Hong Kong, their forest is not in Hong Kong. It's more challenging on how to get started. Yeah. On the other hand, some buyers may want to buy carbon credit to offset their residual carbon emission in order to achieve carbon neutral. Yeah, some international company prefer invest verified carbon offsetting project that directly benefit community where they have an impact. Yeah, so that's great. If the exchange can accommodate carbon credits generated from different country and recognized by international stakeholders, it's much helpful. Yeah, and recently we observed the European Union just approved the world's first carbon border adjustment mechanism, CBAM. Yeah, just launched in December last year. Yeah, it will introduce a carbon tax on imports in emission-intensive sector such as cement, iron, steel, aluminium, fertilizers, and electricity, which currently benefit from free allowance under ETS and has been extended to include hydrogen. In the future, the scope of the CBAM may be extended to other industry sectors such as organic chemicals and polymers. Firms that import these goods will have to buy certificates to cover the cost of CO2 emitted during the manufacturing process. The testing phase will be launched in this year, October. So it's the big impact. We need to pay attention on it. And so that's reasons. So more overseas buyers request SGS to conduct ISO 14064 greenhouse gas verification to their supply chain and manufacturer in different countries to know their current situation first. Yeah, to know more about their existing risk and the potential costs of that part. Thank you.
Thank you. Thank you very much, Miranda. I think you highlight the key point, which our paper also wishes to address. Or attempts to address, to say the least. We did try to solve some of the pain points that your clients are facing, namely, like not sure which, standard to comply and register with and where to trade, etc. So hopefully we are going to offer this one-stop service here in Hong Kong. Terence, I'm going to come back to you for the second question that is related to this paper. We highlighted in the paper that there are a lot of voluntary carbon exchanges, not only in this region, but everywhere, in the different parts of the world. Perhaps reflecting on the experience of the other markets, does the VCM in Hong Kong play a very special role that you see, or what would be some competitive edges and main drivers of the integration, perhaps between Hong Kong and some of the regional players?
Thank you, Rocky. I think the main benefit for Hong Kong that serve as the regional hub. Although trading in carbon markets may be brilliant in Europe and US, but Asia's carbon market is still developing and lagging behind. So the start of this National Emission Trading Program, ETS, the China ETS cumulative trading volume reached 194 million tons carbon dioxide equivalent as of July 2022, with a cumulative turnover of around US 1.26 billion trading volume. We still see a lot of growth. Hong Kong should take on the mission of playing a crucial role in the regional and global carbon markets, contributing to the decarbonization goals of Hong Kong, the country, and maybe the region. Hong Kong is a prominent international financial center and regional hub for green finance. So I think the role for VCM in Hong Kong can have a couple of different roles. First, VCM can supplement to the inadequate coverage of CCM, which is used in the countries. We know the combined carbon market coverage is not available in Hong Kong. Mm-hmm. But the coverage of total global combined market emission is only about 16%. For corporations that are uncovered, the VCM can act as a supplement for CCM for them to neutralize their emissions while they pursue emission reductions and help channel capital to line projects that generate carbon credits. Second, Hong Kong, we are part of the GBA. Establishing a GBA unified carbon market is very important for Hong Kong, I think so. Explore international participation in the GBA unified carbon market and potential linkage between GBA and national VCM, targeting local, mainland, and international investors. In the same thoughts, we can develop Hong Kong into the mainland's offshore capital raising hub and risk management center for carbon market development, which is in line with the policy objective to strengthen Hong Kong as a global risk management center. In 2021, Hong Kong invest in and sign a cooperation agreement with the Guangzhou Futures Exchange. I think lies a very good foundation to put forward this task. Linking Hong Kong's VCM to the ETS of mainland China could be also considered by connecting the mainland Chinese ETS market with a size of 1.26 billion. Hong Kong is able to offer investors access to mainland's massive carbon market opportunities. So as a conclusion, I think the competitive advantage of Hong Kong is we have proximity to mainland China, we have robust infrastructures, transparent operating environment, and mature financial systems. And also we have very good currency accessibilities, particularly we have the core climate platform, just as developed by Hong Kong EX. And the main drivers of the China, facilitating the China 3060 carbon goals, Hong Kong path to achieving carbon neutrality in 2050. All these background and the macro situation can be our major advantage to integrate the market.
Our best friend. Actually, moving on, thank you very much. This is very helpful because you highlighted our role as the connector, gelling, investment opportunities and capital, and bringing on all the centers to the same level. And then, it is going to be very facilitating. And now, moving on to a question for you, Ivan. I think Terence has set the tone already, but I wish you to highlight some of the synergies that such collaboration can bring to Hong Kong. Perhaps between, say, the mainland Chinese market, the Tanpu system, and the Hong Kong VCM system. How can that create some synergies, if any?
Yeah, thanks, Rocky. And I think Terence already make a very comprehensive introduction for the position for Hong Kong and what Hong Kong can do. And actually, during our previous discussion, we believe that to avoid so-called the carbon leakage, Hong Kong should not only be being a buyer. So in this paper, we also highlight that Hong Kong should set up some mechanisms similar to Tanpu or maybe similar to VCS, but being a low-cost, fast-track one to encourage for example, the company to doing more project-based carbon reduction projects. So that, for example, we can say that like a Hong Kong VER, or maybe like a Greater Bay Area VER, or maybe we can encourage the Hong Kong company to doing the carbon reduction. Sorry, I should unmute, right? Sorry. Okay. Yeah. So, for example, like maybe we can also encourage the Hong Kong company to do more, for example, the carbon emission reduction in Greater Bay Area. So that's what we think should from the first one. And for the second one, I think Hong Kong has a lot of the financial service companies. So like Pat highlights, besides the government should do something, the company should do something. So to echo this, also thanks Miranda to bringing into to point out the CBAM, the CBAM. We actually did something last year. We also find that some companies in mainland China also have the difficulties to facing that CBAM, because in the mainland China, actually they have no future market yet. Like Terence mentioned, we have a Guangzhou Future Exchange, but it didn't issue the so-called carbon-related product yet. So in mainland China, there are actually no any hedging tools for the carbon one, especially facing the CBAM environment. So actually, we launched one. The first cross-border tool for the companies in mainland to use RMB to trade directly to buy their EUA futures. So there is a way for them to hedging their risk facing the CBAM. So this is a good one. And I think for Hong Kong, I think more company or more financial service companies should doing similar thing for us. not only I mean, looking at the micro market of the carbon market, that means the VCM, we can also like utilize our own role and power to helping the companies like PESA. They are helping them to doing the consultant job, to help them setting the scientific based target, right? Like a Miranda, they help the companies to doing the carbon footprint calculation, measurement, verification, to know themselves. And for us, we should work as a group to serve them like to provide them a tool for the cross-border future trading to hedging their own risk, right? So for us, like a FSDC or some association to being a hub to to let us all the players to do our own work, to play our own role, to make Hong Kong a real bridge for the different markets. So that's my point. Thanks.
Thank you. Thank you. I think you made a very good point. So the first step for us is perhaps to lay a platform that would facilitate the exchanges between buyer and sellers for carbon credits that are in compliance with any of such standards.
Yeah.
And the next step perhaps is for us to think about feasibility and viability of developing a standard that has global presence but local texture, local flavor, right? And so that would be something. And then I think our advantage being an international financial center is that we do possess the talent and also the firms presence to provide hatching tools or the financial engineering engineered products to mitigate risk for not only players in mainland China, but also those who wish to explore other markets as well. So that is fantastic. Thank you very much, Ivan. I'm coming to you. I know that it's I won't be shying away from asking questions. So Pat, you do advise a lot of the clients for them to mitigate the climate risk, right? So and I'm sure some of your clients are inclined to using carbon credits or the carbon market to mitigate to make sure that they are achieving their carbon goals to a certain extent. So what are some key qualities they are looking for and when they look for carbon credits? And perhaps you can also highlight how Hong Kong can do more to attract more quality credits to be listed on our VCN.
Yeah, well, thank you, Rocky. I think that, I mean, as Ivan has said, some of the things that we've been doing is helping companies set their kind of like science-based targets, SBTs. Once you have kind of like registered with the science-based target, then you have these intermediate goals and what you need to do in the meantime. One of the tools to kind of like meet those kind of like intermediate goals is to buy some of these carbon credits. Of course, the first thing that they would consider is pricing. As Ivan has said, there should be different pricing for different types of verified projects and as such, and that is really happening at the moment, whereby you are seeing a variation on pricing. And then also, I think that in these carbon credit space, there are these that are kind of like really removing carbon from the atmosphere, like reforestation projects, these nature-based solutions, or carbon sequestration projects. Those tend to be the ones that generate a lot more interest, simply because that is what is needed for the science-based target initiative. So I think that, I mean, in the end, what companies are looking for is things that qualify for them to those SBTI targets. So the kind of like the underlying project cost, project quality is going to be very important. The types of standard that really is the project is using. Is it using VCS, gold standard, and the like? The verification process. All of these are going to be very important. And I think that in order for Hong Kong to really play a greater role in this arena is really to, bring about that transparency and also kind of, for people to really kind of feel comfortable with these projects. And in order for more projects to really be registering in Hong Kong, I think that, well, it's if there are a lot more buyers, then a lot more sellers will be here. So I think that the vibrancy of the market is going to be very important. Companies setting up these science-based targets, having to really start buying things now rather than kind of like waiting later. So, kind of like the matching of buyers and sellers is going to be a critical aspect. And of course, as I mentioned previously, kind of like whether Hong Kong or Asia could set up some registry. And I think that somebody has already done this, whereby you're setting up a registry locally so that you don't have to kind of like wait for, the European body to really kind of like certify your project. Those are some of the things that will kind of like help more projects being listed here and for the market to be more vibrant.
Fantastic. Thank you. Thank you very much, Pat. I think pricing, project quality, the availability of the registry, as well as a comprehensive ecosystem. Now, you mentioned ecosystem or the buyer, the more buyers presence here will induce more sellers here. That really brings us back to our paper back in 2018. When we mapped out the entire ecosystem of ESG investment and players. So and what we highlighted there is that once the asset owners, the ultimate asset holders, right, of such are present, then it will induce the development of or at least the further development of the ecosystem. And talking about ecosystem, obviously the buyer sellers are very important. But Miranda, I wish you to highlight perhaps some of the key industries playing a more significant role in driving the sustainable development of the voluntary carbon market going forward, and what role in the equation that the government can play.
Yes. Besides energy, transport, construction, forestry, manufacturing industry, mining, metal production takes up key significant roles now. I think on the other hand, finance industry, insurance, and just international certification body can play their role to facilitate the offset process more efficient with integrity and quality. Yeah. As the primary purpose is to avoid and removing GHG from the atmosphere, I think many industry and many innovative ideas and process or sectors can participate if the green route is more transparent and easy to understand. Yeah. Because VCM is driven by supply and demand. Hong Kong government, I think it can play an active role to support Hong Kong's transition to climate neutrality. For example, government can involve key related stakeholders just like this FSDC to gather all finance and technical sides together to relevant stakeholders to create a simple regulatory framework to enhance the investor trust. Yeah, it's covered from different countries. Yeah, not just now the limited size stakeholder. And also they can upskill the workforce for the green transitions. I know government has the funding on that part already. Yeah. Besides that, two part, and also can provide some financial incentive to cover credit issues to reduce the development cost at the beginning. Yeah, that's can encourage more company to implement VCM to offset their carbon target on that part. Yeah.
Thanks a lot. Thanks a lot, Brandon. Now, I'm actually looking at my watch and I realize that we only have 10 minutes left for this session. So I'm going to open it up to the floor, and we have received a few questions. In case you still have other questions, do type in to the Q&A box. I'm going to address it to the panel. But first, let me try to raise this question, which I think will, well, perhaps be answerable by all the panelists. So given the recent launch of HKEX Core Climate, momentum has been gathered in Asia, and how does Hong Kong compare to the other markets in this regard? So Terence.
We see the Hong Kong current market has no cap and trade system enforced. Compared with trading on carbon and not using carbon credits to compensate for emission outside the allowance. We see in the near future in Singapore, the ACS in late last year, traders and carbon projects developers can use the Vera and Gold standard. And Carbon Impact X, they are using international credits, primarily international and multinational corporations as investors. But I think starting early this year in Tokyo Stock Exchange, we see the trade credit, maybe renewable energy and forest management products certified by the government can also be some new products in the market. Yeah, I think.
Understood. Thank you. Thanks. So broadening the scope of potential credits to be included and trade on the platform. So that's fantastic. And another question from the audience. Apart from being a tool for corporates to achieve net zero goals, there's an increase in investors' appetite for carbon credits as collateral. So what benefits does using carbon quota as collateral bring? And what effect does it have on the liquidity of the VCM on the whole?
Maybe I can answer. Yeah, actually, in maintenance carbon market, lots of the company have already tried this, using the carbon quota as a collateral base, and actually we as early as like 2016. We already launched the first this kind of collateral base for a forestry project. I think in the long term, this can significantly increase the market liquidity for the enterprise. With the carbon quota surplus, actually this kind of we say banking or maybe like using like they use this further realization of their the environmental values and also upgrade the carbon emission reduction capacity with those obtained from this mortgage. We're just coming to have this surplus to become liquidity cash or maybe in the once for some money for the companies to invest other kinds of clean project. So for the whole life cycle or maybe from the whole market aspect, this will in the long term will boost those kinds of market liquidity, especially in this early stage of the carbon market in mainland China. So I think it's a good start. Yeah. So allowing it to allow the capital to be recycled. Is essentially the concept of allowing it to be collateral, and that will essentially boost the ecosystem. Yeah, and more recognized as an asset. And like what we said, so actually the nature of the carbon is a financial product. Right, so being recognized by the financial industry is a key. Yeah, thank you. Thanks. There are two questions. I think one from our friend William, the other from someone not sharing the name. They are similar, but and that's why I'm trying to address them here. So how can investors make money here in Hong Kong from the VCM projects? And as a matter of fact, how can retail, if so, how can retail investors join the VCM?
So I think Ivan mentioned a little bit, you were alluding to it in one of your answers to the questions earlier. Perhaps you can have a go first, and then I'll open it up to Pat and the others.
Yeah, from my point of view, and not my point of view, actually, a lot of research institutes already have the forecast of the carbon price, and we see the trend of the carbon price is, of course, is boosting up, and like Miranda mentioned, the CBAM will of course, and other to the reason for the price of the carbon to boost up. So like now we can see the price differences in different countries. For example, in mainland country, for the national carbon market, we can only see like a 50 or 60 RMB per ton. But in EU market, it's 80 or 90 euro per ton. So there is a huge differences. In the future, if I think, but this is, I think the invest also needs some technical background, or maybe you have to know what you invest. So if you invest the right project, even though in the VCM you find some, for us, we think like a natural-based project, or maybe some feature project which can meet more SDG goals from the UN, that may be a good project. And in our paper, we also highlight in the future there will be like Terence also mentioned the core carbon the principle. So I think we should being an investor, we should pay more attention to some high-quality carbon project. So this will be the way for being more recognized by the market. But like what I said, Hong Kong should set up a marketplace for the market-oriented players. So that previously, like VCS, like CCER, like other standard, the market rules set the standard. But then to try to see whether the market or maybe the buyer will recognize this kind of standard. But I think like a Hong Kong, we serve as an international financial hub, we can change our mind. We can try to, like what Terence said, we can allow all the, or maybe not more, we can allow more different centers to coming in and let the market to decide which one is the best one.
Understood.
Yeah.
Okay, I think actually, when you consider a question similar to the carbon credits can collaterals, doesn't mean we can turning excess carbon quotas in your balance sheet into cash flow. So you can leverage the cash flow to make an investment. So I think it's a very good idea to creating green projects and reduce the carbon emission as a carbon asset management perspective. Just like similar to different commodities products. Even though the VC market is not very active, but when we consider under some derivative tradings, the spot market versus the future markets is always have a very good liquidity to especially for companies, they need to have a lot of carbon emissions. Maybe some quarter trading, this future products, just like the export trading of the currency, similar. The repo, yes, the repo mechanism for carbon credits may be another. If you have doing enough market research to know the fundamental supply and demand, you can make money through your good research of the supply of quality carbon credits based on the spot and future markets.
Understood. Pat, do you have something to add to this question about participation of investors and how investors can make money?
Not so much. I think Ivan and Terence really covered it. I think that basically let the market decide, right, of the pricing. And I think that price discovery aspect is going to be really critical in terms of kind of like the exchange. That's one of its roles. And once you kind of like see that there is going to be kind of like, well, I think there's no doubt that these carbon credits are going to increase in price over time, because I just don't think that there are enough supply to meet the demand going forward. So right now, maybe it's okay, but I think the closer we get to 2050, you know, the kind of like the more kind of demand there will be as compared to supply. So I think that, I mean, in the end, there's no doubt that the carbon price will go up. And really, you know, it is a good time to really kind of like start exploring as an investor right now.
Right, I just want to highlight that, this is not a sales pitch and we're not trying to, like urge investors to, pour money into the market, but it's just a sharing of thoughts by practitioners. I'm going to take the liberty of extending the webinar for another 5 minutes because we are receiving a lot of questions from the floor, if you don't mind. Pat, please do stay with us for another 5 minutes. Until then, I see that there are a couple of questions that I can perhaps answer very quickly. That's one question from Liu Wei from Hainan International Carbon Exchange, who is very interested in learning what level of cooperation in practice that the Hong Kong Exchange could work with mainland exchange. I think this is really open, and I am going to extend such question to our counterparts at the Hong Kong Stock Exchange accordingly. And as with the question from Dicky, who asks us when Hong Kong would be setting up perhaps another volunteer carbon exchange. We don't know, but then we do believe that with the right kind of the constitution, I think, it's really up to the market as to when they should come in play. Now, Max from ADM Capital Climate highlighted that for the suggestion of creating Hong Kong's own registries, there's a potential issue of a lack of international trust in projects not registered with BCS gold standard and instead with an unknown new registry. I know of a company trying to establish their own registry here soon, but the focus is on BMRV and DLT as a way to entrusting trust. However, I worry that the markets will be still conservative towards such innovation for some time. What do you think? I think this is a very valid question. Pickers, Pat, do you want to have a go first?
Yeah, so I think I'll go for the one, Max. I think yeah, you're right. I think that the trust is going to take a while to build, but we have to start somewhere. And by using similar standards for registry, but having a registry in locally, I think that would kind of like be put Hong Kong in a good position to have a bit more voice in this space. I think it will take a while for people to get comfortable with it, but I think that that is really kind of like one of the key things that probably should be done in the coming years in terms of kind of like beginning of kind of like setting up a registry and then kind of like not copying, but kind of like having very similar standards to the international standards here. I think that would be good.
Thanks. Prince?
Yeah, for the questions about the cooperation between the China Exchange versus the Hong Kong Exchange. Yeah, I remember during our community meetings, share with Professor Bar about if we can access all the data of different CCL exchange, the daily or different credits, we can access to all the informations. Actually, Hong Kong is a very good place to do the similar to what I mentioned. There's some derivative trading, which is matching to these underlying products in CCL. I think especially if we have a different carbon standard, we qualify, which is a higher quality carbon credit is trading in CCL, we can do some derivative products in Hong Kong versus this is another, because we understood that the stock exchange in the major mission in this year is to get most of our the products trade in offshore RMB. So which is I think for the RMB internationalizations, this is a very, at least we don't have the, no need to do the currency hedge. So the pure, I mean the research on the pricing movement of the credits will be a interesting and or I think more predictable or more analytical tools can help to invest in this perspective.
Thank you. Now the 5 minutes is up. Miranda, Ivan, do you have any points to add?
Yeah, just one point and adding up after following Terence, I think for the cross-border trading, it's not only carbon, but always a challenging problem. All right. For the carbon, there is a NDC under the Paris Agreement. So each country should has its own national determined contribution. So there is a double counting problem for being, the carbon credit are claimed both by a buyer and seller. So I think what we also had included this in our policy paper. Like for example, using blockchain, Pat also highlight to trace all the carbon credit and what Terence says, for example, like a CCER to align with the international one. So through those kind of blockchain and can fully trace how the credit are transferred between country cross border. And so as to whatever the result in the next COP meeting, COP28, will decide the NDC, the Article 6.4, and we will have the infrastructure to serve as this kind of international trading. So this is the key, and I think the question from the audience, a lot of the businesses are doing, a lot of companies are doing using blockchain to doing the carbon trading. And so there's a trend, and this is a mass of the infrastructure that we need to build up. Yeah, so that's what I want to point out. Anna?
Yes, I agree with Ivan. Yeah, we can start first to have registry first and fulfill the basic principles, just like the real, measurable, the additional, permanent, non-leakage, monitor, and relevant to social environmental safeguard is the basic. Critical because it's voluntary, not mandatory. So the demand and supply issues is critical for the international stakeholder recognize this. So it's more feasible. Just agree, watering is one of the good tools, and also satellite monitoring to watering the forest is also very good. So watering, machine learning and different new technology in Hong Kong is quite in advance. So we can apply it and prove it to the international stakeholders.
Thank you. Thank you very much. Now the time is really up, but please do stay with us for 1 more minute. Our colleague will be pulling up the polling questions to ask for your views on the topic and our what you may want to hear from us going forward. So please do stay with us for an additional minute. Other than that, thank you very much for joining us this afternoon. Hope to see you again later. Thank you.